I like this. I'd actually forward test a short potentially from this level. Obviously, it's not a valid setup yet, so stops would be way higher, probably above what we're entering on the hourly fair value gap. So let's drop down to the 15-minute or 5-minute and find the smallest fair value gap in that level, and then it tells us to put our stops above that high, where the right there, which is actually quite high, but let's see. Target, if we wanted to target the hourly fair value gap that's unformed down here yet, because the hour's not over, there's 15 minutes left of the candle. If that was the case, then I could pull this fair value gap down for a 1 to 3 at the consequent encroachment of that level right there. So I'll leave that right there, but I think that's a nice trade, I'll be honest. We've swept the previous day high. We're in a higher time frame PD array. This is like a very, I wouldn't even call this a mid trade. It's not a good trade, but it's my anticipation for where price is going to go. I think the word's prerequisite or something. Hey Siri, what does prerequisite mean?
As a noun, prerequisite means a thing that is required as a prior condition for something else to happen or exist. Do you want to hear the remaining one?
Oh yeah, I was right. Prerequisite. That's my prerequisite trade. It's not a great trade. It's a prerequisite trade. As in that it's not a valid setup. Or it's not a setup based off of, I don't even know where I'm going with this. Basically, it's not an entry model. It's a prerequisite. That's what I'm trying to say. Trying to justify it though, but it's not. It's not like an actual trade. It's just a conditional bias. Like I say, we can always take out the highs over here. So, in fact, I'm gonna anticipate that actually might happen, and I'm just gonna form this high as my high of the day. Like, I want to see price wick this out and potentially reverse in this level in the macro between these two blue lines. Really high that I marked out. That secondary high would technically be the intermediate high, and to be fair, We have been sweeping a lot of intermediate highs recently, so that was the intermediate high that we swept yesterday for a small retracement. I did say this could be the turn of the tide where we go bullish. If you want to check yesterday's live stream, the 16th of March. But yeah, really clean. Really nice price selection, to be honest. Especially for a March. I should say, especially while we're at war, to be honest, you know what I mean? But yeah, I can't lie, the price has been really clean. Just waiting for price to get above this high before I anticipate a reversal. That's all we're looking at right now. That is it. As soon as we take out this high, I'll be looking for a reversal. Or, in fact, could we have a 5-minute fair value gap at this high? Because that could be very much what's pushing price away. I'm going to include both of these. Makes it like a 10-minute fair value gap. And just drag this over. And just see. Yeah, and look at that. Wow. Alright, cool. So, I would call that the gauntlet of the move. That's the lowest. Even on the 1 minute, what's the 1 minute saying of that move? Do you know what I mean? Like, we've got to look at every time frame possible here. Even on the 1 minute, that's a whole... Well, this 10-minute fair value gap, even on the 1 minute, could be called what you'd call a suspension block. So, ideally could want to see price push away from this level. So like even on the 5-minute, we'd want to see price stay within these levels, which it hasn't. So my next idea would be obviously this high up here. But that's how you can figure out, like, you know, where's price going to reverse from? Is it going to take the highs? Is it going to reverse from internal to external? Or is it going to go from external to internal? Or, do you know what I mean? So it's a conditional tense. If we take this out, then I'll look for this. But if we take this out, then I'll look for that kind of thing. It's conditional. So this could be the final push up now towards that high that we wanted to see. So I'm basically just making a comment in the Discord, saying that, whoops, basically saying that if I wanted to see bullishness today, I'd want to see price break past this 0.75 retracement level, and that if I wanted to see bearishness today, I'd want to see price bounce off this 0.75 level, so essentially not go any higher. But that is my bias. You guys know my bias. So if we were to see a change in state of delivery to the downside, where would it occur in this range? Well, we can see the most previous swing high out of this accumulation level was right here. So then we'd want to see price form a new swing from this level. So it swings here, back into price, filling this out. So here we could officially claim is our change in state of delivery, or correctly said, market structure shift, right? So let's put that there. Then we got a breaker structure right here, and then we've got a fair value gap. So this now aligns with my model. We've swept higher time frame liquidity, we've made a breaker structure after a market structure shift, and we've now retraced into a fair value gap at the consequent encroachment. And if I weren't yapping, I would have said I'd potentially look for a short here, so I'll just put my short entry right there. Or in fact, I would have put it at the consequent encroachment, so I'll keep it realistic, put my thing at the consequent encroachment, my stop loss at the third candle high of the fair value gap pattern, and then target a 1 to 3 if I was on a combine, or a 1 to 2 if I was on an XFA, which is an express account. But yeah, here's a forward tested short into the first presented fair value gap of the session. Now, of course, it's a bit of a risky position, so in times like this, you could even risk half your account, right? So you could risk half of a percent or whatever you normally risk and target a 1 to 4 because you've got a really tight stop loss. So because the stop loss is really small, but the targets are very close, and we've been extremely bullish, we can make that exception. But please remember that it's an active decision, and you've got to assess the situation around you to make that decision a smart one. So yeah, don't be irrational trying to chase price, thinking, oh, if I just half my risk, double my targets, I've got less chance of losing more money. Yeah, just be responsible about it. If you wanted to de-risk because you weren't sure of the position, then that's when you consider doing them things, but don't do it for the sake of it. So price is moving extremely slowly, but obviously this is technically a silver bullet setup, so I'm going to trust in the setup that it could be one of the 10% chances that it could go to stop loss, as the setup has a famously notorious 90% win rate if you use it correctly. You know, between 75 to 90% anyway. And that's targeting 1 to 2s as well. This is also hitting for a 1 to 3, which takes this down to like between like 55 and 70%, but I think on average it's about 60 something, like 62 or 64, I can't remember. But yeah. Like increasing your stop loss, increasing your take profit reduces your probability. I'd expect it to not be directly not directly correlated, and more like I don't know how to describe it, but I'd expect the graph to be to the power of 2. So it's an exponential curve. So the more that you risk, the less chance you've got of hitting your target. I forgot the word for it. It's going to wreck my brain, so I'm going to use ChatGPT to find out what it's called. I said exponential. Oh, it's just indirectly correlated at the power of 2. So yeah, I was all right. It's indirectly correlated at a exponential squared parabola. I don't know. I'm about to find out. Instead of directly correlated, what would we say? It says non-linear relationship, but if it's to a power of 2, it is linear because it's to the power of 2. That would be the linear relationship squared. So that doesn't make any sense. Quadratic relationship does make sense. Curved relationship is just not even a term. Oh, ridiculousness. Ladies and gentlemen, it's indirectly correlated, but that is beside the point. We are creeping our way towards take profit on what could be our first trade of the day or only trade of the day, or who knows. You gotta stay tuned and find out. So this is where I would be at 100% be at break even by now. This is where I'd be cautious because we're right at the consequent encroachment of the first presented fair value gap. So I could be either looking to move my stop loss from break even up to 1 RR maybe to secure myself a payout if we do retrace. Not a payout, sorry. Take profit if we do retrace. Obviously, it'd be 1 RR rather than 3 RR, but that's risk management. What can I say? I still do believe we might even take out New York's low. So, I mean, if you really wanted to be lucrative, you could. I wouldn't put it all the way down there, but you could put it there for a 1 to 4.5 RR, but that is very lucrative, and I do not recommend doing that if you are in this position. But, like I said, keep an eye on it potentially reversing too, because that could happen right now. As we are in the first presented fair value gap. Boom. Take profit smacked. So then eventually, you know, like imagine we put So one thing I like to do is if I'm on an express account, you can target a 1 to 3, take partials at a 1 to 2, and then leave runners. So then you're obviously your stop loss after the 1 to 2. Sorry, your stop loss after the 1 to 3, after taking out 2%, would remain until. So if you're in 25% of the position, you'd risk normally a 1 to 2, so it'd go for a 1 to 8, and that's for another 1%. So that would make the original 1 to 3, which is why I don't like doing it. But that's an option. So if you were in this for 4 minis or 4 micros or whatever, 4 contracts for arbitrary numbers, and you had four lots. So see up here it says quantity 14. Imagine it said 4, and we took out 3 of them here. Then we're going to leave the remaining 1 to go for a 1 to 8 RR. So that's risking 25%. So if you're risking $1,000, that would now be risking $250 stop loss. And then 250 times 8 is obviously 2,000, which is 2%, which is double of the 1% that you'd be risking normally from the $1,000. I hope that makes sense. It does make sense, I just said it terribly. So now let's forward test this. If we were a partial trader, I don't like partials for this exact reason. But if we were a partials trader, this is what we would be looking for. Next, a big dump below these lows, potentially into this hourly fair value gap down here, which is now closed. So we can chop this away and put 1 hour fair value gap. Brilliant delivery so far. Now, am I anticipating price to go all the way down here? Yes, potentially, but I don't think today is overly bearish. I think we could be potentially forming this reversal down here. And then, for the rest of the day, we could do various things. We could chop, we could slightly chop lower, slightly chop higher, or we could reverse. Or we could continue further down. So, do I anticipate price to go fully further down? No. Do I expect one of the others? Yeah. Am I confident price can even get down to here? Somewhat confident. And when I say somewhat confident, I mean, if this was my stop loss, I'd be at break even by now. So if my stop loss was like up here, for example, and I was trying to take a 1 to 3, and this was my target, 1 to 3 down here, then I would still hold my position with my stops to break even. But am I confident it will go there 100%? Yeah, well, I can't comment on that. I'm not dead certain on that fact. But like I said, if I was in this trade, my stops would be, higher than break even by this point, just to claim any bit more profit that I could, especially if I'd taken partials at a 1 to 3. I'd definitely have my stops higher than a 1 to 1, just because that would give me a little tiny bit more profit on the day. Also, we did just about manage to sweep out these lows earlier. Remember when I was saying these could be it could be an area reversal, this low, New York low. So obviously these wicks are where orders have gone in. But yeah, if that's the case, that's exactly what I was saying for earlier. In this first presented fair value gap, it could reverse, it could reverse. These are all little points to keep your eyes on. So don't be scared if you're in the trade. Just manage your risk appropriately. So in this instance, past the 1 to 2, or past the 1 to 1, starts to go break even. Past the 1 to 2, you eventually start to take partials or hold for a 1 to 3. Take 75% partials, that pays for a 1 to 2, and then you can hold for a 1 to 8 for a remaining 1%. But that's if you have got high conviction the trade would go there. For me, I haven't got high conviction the trade would go here, but I'm just forward testing it for the sake of it. I would have taken profit at 1 to 3, put stops at break even at 1 to 1. I would have put my take profit at a 1 to 1 level once I got to 1 to 2. So, and then yeah, obviously you guys know the story. I would have got paid. Just for anyone that likes to use VWAP, we are respecting the second deviation of the VWAP, so we've been incredibly bullish, and we changed out of a bearish sentiment towards the end of, well, just during London session open, to be honest, we changed into a bullish sentiment. So we could be continuing that bullish sentiment from the London session. Sorry. Really interesting price delivery right here, to be honest. I was going to expect if we do go bullish from this moment that we just break through all those highs on the left and it'd be a low resistance liquidity run. Because this is obviously quite some choppy price action, so a lot of orders in here. You don't want people to consider getting out. You want to just rip through that level right there. So, you know, could be potentially respecting this order block, should we say. Could be a mitigation block or an order block. This would technically be the order block, and the one before it would be the mitigation block, but they're very much overlapping, so just dragging it all into one as a higher conviction confluence is not bad. If they're overlapping, it's valid. Do you know what I mean? I will reduce the size of these other PD rays though. Obviously we've got this one here. I'll reduce that, and then this hourly fair value gap got inversed technically. That's a good point. We've also inversed this hourly fair value gap, so it's actually good to check the higher time frames to see if we formed or tapped into anything hourly since then. But my next perfect target for price would definitely be this hourly fair value gap, I can't lie. That big efficiency down there. I do want to see price go down there, so if it doesn't, I wouldn't be too happy with taking a long, especially after all of the bullish movement from London session continuing forwards. so sad I would have been tapped out at break even. You know what? It's one of them bitter pills you've got to swallow that you can be right and still get taken out. It's just reality of the market, isn't it? You know what I mean? It's just something that we all have to face, is the reality that we have a percentage in our win rate. If it is working. There's a delay. It might not be working. Oh, it is working. I knew it. I really do think price will go higher, and I have to give props to Kane in Terra Trade and VC, obviously, or not the VC, but the Terra Trade and Discord, who did call potential longs today. And while I did catch a short, and I forward tested a good short at a 1 to 3, I'll move that back down there because that's what I would have definitely taken, a 1 to 3. I wouldn't have wanted to be in taking. I don't take partials. I don't like doing it. It's just a preference. Also, I wouldn't have wanted to trade past the first presented, so leaving that position on my screen because I do like to try and keep track of the trades that I've forward tested. I was forward testing the partials for everyone else. This would have been my trade. But yeah, I want to give huge props to Kane, who did potentially call longs today. So, more the reason to get my Series 3, because that is what Kane did. Kane got his Series 3, and since then, the level up has been insane. So, definitely trying to, follow in his footsteps, you could say, because, when someone's doing something right, and you feel like you might have been misguided in your journey or whatever, you definitely follow the people that are doing it successfully. So, big shout out to Kane. So if we were looking for longs now, where would the tide turn in the tide be? Well, I wouldn't classify this as a swing. So you could say we've broke structure if you want to potentially there, but I don't classify that as a swing. Just small little 1 minute candles on their own. I don't think that's a swing. Like this, where it clearly pulls back and rejects, it's got wicks, it's got orders going in, that's a swing. So then we get this swing up, this is a swing down. So the next break of structure would be literally where it is right now after these highs. So we've technically, well, that would be our market structure shift. Or, it's hard, but we do accumulate a little bit here wick out and then swing back up. So you could consider this your market structure shift, and then this be your breaker structure. So now we've got a valid breaker structure. We'd be looking for displacement, a fair value gap, and retracement. So this is like quite clearly a level of resistance right here, and it is inside of all these PDRAs that price is struggling to move. So for example, this hourly inverse fair value gap, it's struggling to get back through it to push higher. But if we do just mark out where price is currently, there are also other inverse PDRAs. No, that's the highest one. I mean, right there, that's retesting the breaker structure from this key level. So that black line, see how we break above it, come back down, retest that breaker structure. See, it's difficult to find, or should I say, it's difficult to have confidence when you've got a conflicting bias. So what you do in that situation is wait for confirmation. Well, how do you do that? So for example, when I said earlier, say for example in this setup, how would we look for confirmation here? Well, confirmation would come after we displace this low, so it would be in there. But then of course you don't get the ideal target that you wanted to, because your stop loss would be originally much higher, so your take profit would be originally much lower. So yeah, that's where the problem lies right there. Now, could we still go there? Obviously, price is still delivering, and it's not taken out the high yet, so, or should I say the stop loss. So it is still definitely a chance. So what I'm looking at right now is we came down, we tested, all this key liquidity right here, and then one of the side notes I said to Price is we could be creating a new dealing range, trading up to a new dealing range. So what I was basically saying by that is when I made that circle earlier in the live stream with the gradient down from the high to the low, the Fibonacci tool, I circled the new daily opening gaps up here. There's 2 new daily opening gaps. I don't know why I keep yawning, sorry. There's 2 new daily opening gaps. And basically, in between, above the 2 new daily opening gaps, we have the 0.75 retracement of the entire 4-hour range on the left-hand side. So, if we were still bearish, we'd want to respect this dealing range and potentially push lower. Now, what I mean by we could be making a new dealing range is that we could be going back into a new area above that 0.75, but we need to see conviction in order to get us there. So when I was saying before we'd like to see confirmation, if we were going to take this setup when we'd got confirmation out of this area, it could be when we get a bullish candle or some displacement or an inverse fair value gap. So you could enter on this candle, stops below the low or the fair value gap, but in reality you should put it below the 3rd fair value gap, which is all the way down there. But even if we were to forward test that, sorry, it wouldn't be all the way down there, that was me being wrong, it would be right there. But even if we were to forward test that exact trade at a 1 to 2, the stops are very far away. But if we were to get there, this is where I'd want to see price trading up to by the end of the day. So let's forward test this, just for anybody looking for potential longs. And this is a big trade because we're forward testing it with confirmation, waiting for the displacement candle away from the PDRA to give us that strong, that feeling that we're confident in taking this setup, that we were right. So if longs are going to play out for the rest of the day, this is what I'd like to see. I'm going to go get a drink just because I think that might be why I'm yawning so much. I haven't had a drink since I've started this live stream. I'm starting to get a really dry mouth. So give me 2 seconds. I'm back. It's the return of the Mac. I'm still alive, just like... No, I'm joking, I'll get copyright striked. If you guys want to have a laugh, if it's still online by the time you're watching this, which I'm assuming it should be, I don't see why I should delete it. I made an advert for Terra Prime. Terra Prime is essentially a coaching system. We're trying to give people a huge variety of information and take them upon a coaching journey, giving them personal independent support on what they need to do in trading. And basically, we, sorry, I was interrupted. I forgot what I was even saying. Let me listen to the live stream. It's the beauty of having a live stream. You can listen to what you was just saying. Whenever, whenever the audio plays. Oh wait, I think I've just skipped to the part I was muted. Yeah, I was saying if you want to have a laugh, go and look at the video that I most recently made for Terra Prime. It's basically a coaching journey. We're taking people from like any part of the trading journey and trying to make them profitable. It's super cheap, so that's part of one of the benefits of it. But I decided to make an advert, and it's on my YouTube channel. You can look at it. It's really funny because that got a copyright strike, even though I typed in on YouTube non-copyright suspenseful music or whatever I typed in, found the soundtrack. It was non-copyright. Saved it, used it. I cut and stitched the track to meet my requirements. I didn't use the original track at all. The original track was like 3 minutes long or 2 minutes 50, and the video is 1 minute 50. So I cut and stitched like the start and end together, and mixed about some of the middle bits and put them at the start. So like I pretty much remade the entire soundtrack. I think I used like 4 different segments to rearrange it. So it's been rearranged to a point where it's not the same soundtrack anymore. Like if it was a song with lyrics, it wouldn't tell the same story that it used to. But because of how YouTube works, I don't know how it actually does work, but it must go off the bar count. So like every 8 or 16 bars, it's going to try and recognize what song it is. The same way you only need like 5 seconds of a song for Shazam. So that's what my YouTube's doing. It's listening to a small section of it, going, "Oh, I know that song," and going, "Bang, copyright." When in reality, it's just not the same song. I appealed the decision too, and I put in the decision that I've clearly not used the same soundtrack. I mean, I've recreated the soundtrack. It's a sample, but it's not the same soundtrack, and the decision just got denied. So yeah, if you want to have a laugh, you can go and laugh at me for that. I found it really funny, to be honest.